Hello and welcome to today's more important analysis videos on Wednesday 19th of July with me, Richard Payne, market analyst at Hantech Markets. We've got a sort of a relatively quiet open really, a little bit of a dollar rebound. Nothing really doing in the markets to be honest today. Sorry, let me just show you the board. So I have my charts big mixed up there. Little bit of a dollar recovery, but that is showing pretty much across FX majors, other than the interestingly the commodity currencies, or certainly the Aussie and the Kiwi. And that has helped to unwind some of the weakness that we've seen, but not a lot. And you've seen sort of the Treasury was picking up a touch today, certainly on the 10-year, and that's sort of helping to support the dollar a little bit. But to be honest, there's not a great deal behind this move, and I don't necessarily think it's going to last especially long. What we have got is not a great deal of movement on FX or equities today. Look at that. Really is nothing doing. What we had on Wall Street yesterday was a rebound, actually, following on from initial weakness to the downside. Markets closed not a million miles off the top. But you haven't really seen a sort of a follow through of that sort of move into the European markets. There was a slight sort of rebound on Asian markets, but yeah, the Europeans are not really showing follow through. And again, it's pretty much across the board, nothing really doing in terms of commodity prices. Mildly weaker on gold and silver as the dollar has recovered. You got your oil prices, which are basically mildly lower. Nothing really doing. Markets are probably looking ahead to the ECB tomorrow, really. But in front of that, what you do have is a little bit of US data, very sort of minor housing data, with the housing starts and building permits, both expected to improve slightly. To 1.16 on housing starts, 1.2 on building permits. You've got the EIA oil inventories this afternoon. Now that will drive volatility through the oil price. You had the API oil stocks, which was slightly increased or higher than expected yesterday. So the EIA come this afternoon. We've got weekly crude expected to be minus 3.5 million barrels. Distillates 1.2 plus 1.2, so that's increase in inventories. So weekly crude stocks draw down to 3.5 and a drawdown on the gasoline. So you expect that to drive a bit of volatility this afternoon, but in front of that, there's not a great deal of market movers. My chart today is the the sterling yen. Now, sterling yen has been sort of bumping its head up against this key resistance around 148 figure, which is a big level that has been basically the top of the range that we've seen throughout the last 9 months. But the market started to fall away yesterday on the back of that inflation data of disappointment for the UK. But look at these momentum indicators. MACD lines beginning to cross lower. Stochastics have posted a bear cross, the RSI at a sort of 3-4 week low. Now you're seeing this coming as these sort of indicators did the same sort of move in May, and subsequently the market fell away quite sharply. Now you've got the prospect of a double top also in place, 145.25 being that neckline. Yesterday it got tested, held, but again it seems to be sort of increasingly as a corrective chart. Now a breakdown of that would be 145.25 projected down from, let's do a conservative, 147.60, so that's what, 240 ticks. 235, 240 ticks. So you'd see potentially sort of 143, 144 area on that correction if we were to see a correction. And that would sort of take you back to the 143.95 old reaction high, and then 142.75, which was another old reaction high. So you could see a correction growing as a possibility here. You've got the hourly chart, which, if I zoom out, you can see that top pattern clearly. It's sort of fairly range bound, little bit of a minor bear bias with the stochastics again rolling over around the sort of 50-60 area, tracking lower. MACD lines really been able to sort of move back towards sort of neutral yet, and arguably the RSI now increasing in the last couple of days, failing around 60, failing this morning at 50. So there is the prospect of this little rebound that we've had from yesterday afternoon being sold into. You got the resistance that comes in around that sort of 46.30 area, 46.30, 46.35. Today's low is 45.80. 45.83 really, but yeah, if you break that to the downside, I think that's going to put pressure back on the lows again, and I think this sort of is the prospect of certainly is a range at the moment, but could well turn into a top pattern, as I said, if 45.25 is breached. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.